Now blue is not in her.
All right, so this is going to be my video explaining how to gauge magnitude. So this is going to be Akigen on the weekly, and this is just going to be a series, and I'm just going to go through multiple charts whenever I see a nice one that has a good, it has a very simple view of it, so you can understand it super easily. That's what this is going to be. I'm going to be creating a playlist on my YouTube for it, so look out for that. But first of all, so gauging magnitude. What do you have to know before this? So before this, you need to understand, and this is going to be, you go to my resources section and you scroll up, or you go to pin messages, you're going to see this. So what does this tell us? This tells us the magnitudes or the targets that we're expecting. And the nice thing about the strat is that since it's all universal truths, meaning this all has to occur within a market and it has to occur on a candlestick chart, you can use it on every single time frame, no matter what. You could use this on a decade chart and it'd still be the exact same as if you're using it on a minute chart. And you're going to notice the one that we'll be looking at is going to be the outside bar, or the bar that begins going outside. And you're going to see this started as a 2 up, and then it goes red and starts coming back through. And that's a 1 bar rev strat because we have the inside bar before this occurs. But the outside bar by itself is going to be a reversal as it goes red and takes out the other side of the range. And then you're going to also see what we look at is going to be a 2-1-2 bearish continuation, which you're going to see your entry and your magnitude or your target for the short is going to be like so. So now if we go to the example, you're going to see Akigen. So the first thing you want to do is look at what are my signals on the lower time frame. So we're looking at the weekly and the monthly. Why is this? Because right now it is a Sunday. And since it's a Sunday, the only thing that's going to be in force is going to be the monthly, quarterly, or yearly signals, since those occur over the weekend. And the weekly and daily signals are going to be occurring next week after the market opens. So we look at the weekly, since this is a smaller time frame than the monthly, and we want to gauge our magnitude. So first off, if you can draw the broadening formation easily, which this one is pretty simple to see, it's going to be like so. You get the slight higher high and lower low. So now you can draw that broadening formation. If you can't, you have to go look at your larger magnitudes, and you're going to notice that this is a 2 up, go 3 down. So what's the magnitude on that? That magnitude, if you looked at the chart here, we don't have the inside bar, but this 3 is going to be the same type of thing. We're going to look to take out that side of the range. And this is because we know if price fails one side, because this was a green at one point, and goes red, it's going to try and take out that other side. So if I just clear the broadening formation, if we're looking to take out this side of the range, now you can see we took out this side, which means we have the higher high to this. The broadening formation we're coming through is going to be this whole entire previous candle. So you don't even have to draw it. You just have to understand that's what's happening. So if we just preemptively drew it of what it would look like, it'd be something like that. But now you can go to this chart and you're going to notice we have the higher high compared to this. And you're going to notice we have this lower low compared to that. So this created the broadening formation because this 2-2 reversal creates the broadening formation when it completes. And you're going to see completed, these 2 bars compound outside bar of this bar. And now we're coming back through that. So hopefully you can understand that, which is how we gauge the magnitude. It's the broadening formations. But now how we use that. So if we look at the weekly, you can see we have a double inside bar, which this is compound inside bar. But the way we look at this is if we enter that, it's likely going to trigger that, which is likely going to hit our magnitude of that weekly. And now comes time frame continuity and multiple time frame analysis. So once we hit that weekly magnitude, we have exhaustion risk if we don't have a larger time frame magnitude. Because if the larger time frame is bright green like this and we took out all the targets for the week, that's exhaustion risk because we don't expect it to go any further. And if we start coming back through, that's going to be your broadening formation going into the green everything, which is time frame continuity against you. And you can see this was trying to go and take out that, and guess what? It did. So now you have that cleared up. What is our magnitude on this? 2 go 3. It's going to take out this right here. Oops. This right here because we get the outside bar. So once we hit these targets, now our next target's going to be that right there. And that's how we can confidently hold because we know that is likely to occur. Without a reversal against us, we're going to 524. And That's how you use the multiple time frame analysis. Now, if you were to do it on a lower time frame, if you wanted to look at day trades, we would look at something like, we could look at SPY. So if we look at SPY, if you're looking for day trades, first of all, on day trades, you're going to be using daily and weekly normally, which we're just going to show daily in this case. And this is going to be using the hour chart for entries, which you can use any other time frames. You just have to be aware of the larger ones. And you're going to see, what is this? So we have this 212, which we're looking to take out that, and we did. Now we gap down and take out this right here, which is a previous pivot. And if we go green after taking previous pivots with the reversal, that's something we could look to trade. So you're going to see this is a 2 down, go 3 up day. And when I say go 3, it just means it's 2 down in green or 2 up in red. And this could be something like this, 2 up in red. Because we know we take out both sides of a range. So if we go green and we're trying to take out the other side here, we want to be taking that long because we know we took out this side of the range. And that's how you get your broadening information for trading intraday. So you're going to see this is lower low compared to this. So that's the lower. And now this is your higher high compared to that. And you can also throw your gap fill target in right there if you want to. But you're going to see if we mark our higher highs and lower lows, we took out this, went green, and then we get 2-2 reversal, and we're looking to take out that because that's the other side of that broadening information. And what do you get? We took out that. Now guess what? We're going red and coming back through it. So we're really screwing people over here because we're chop shopping away. And you're going to be like, well, Alex, this is an inside week. It's like, yes, that's why we're looking at daily magnitudes because this weekly has no magnitude. And what we know about inside bars is, yes, it begins as a consolidation like this, but it creates the broadening formation because eventually that consolidation has to go somewhere. And you're going to see we have the higher high, the lower low, higher high. And now maybe next week we open and then start tanking back down off of this broadening formation, or we expand it to the upside. And you're going to see the weekly 212 would be the expansion to the upside like so. But that is pretty irrelevant. So if we look at the daily, you're going to see this 2-2 reversal. We're looking to take out that, and then that maybe, and then that maybe. And we did all of that. So by the time you get up here, you should be out of your position. And you're going to see this hourly chart. We use the hourly to trigger larger time frames to go towards where they're going. So we know this goes green over this right here, this daily open. And if I mark that for you, like so, you see this is your daily open. And if that goes green 2 down, we know it's trying to take out the other side. So where's your entry? You're going to be looking to take this 2-2 hour, which it only has a magnitude to come up here because you're going to see it 2-2. We go compound outside bar, that previous one. And if you look at the strat combo sheet, you're going to see it 2-2 reversal bullish. We target the previous bar. And hopefully this kind of clicks for why we use gappers because we have such large magnitudes. Those are good to trade. But you can see we're looking to take out that. But now this daily is setting up the 2-2 and 2 go 3. So if this doesn't go 3 now we can get long tomorrow. And now we're looking to take out that, maybe that, and then that up there. So you can see how entering off this 2-2 gives you the larger magnitude of that daily, which you're going to see maybe you got stopped out or something towards the end of the day with all that wicking. But the idea still stands. This 2-2 reversal got you your entry into the 2 go 3 day. That has a magnitude to take out this. So that's how we use those smaller time frames while gauging our magnitude on the larger ones so you can get tighter risk while still getting the larger reward of those larger time frames. And this isn't something you're expected to be super, super good at right off the bat. But this is definitely something you want to get better at because this is how you make bigger money while risking less. And if I were to show you what we can look to space, this is going to be a previous one that we did take in the Discord. Here it is. So first of all, we'll go to the monthly and the weekly. And we took this. You can see double inside week. We took that. And why did we take that? You're going to see this was the next monthly open right here. So the second that month opens and we go red, we're looking to first not be inside month, which is going to be to take out this right here. And then once we take out that, this 2-2 reversal didn't hit magnitude yet, so we're looking to take out that. And then if we take out that, our next target is going to be to take out that. And if the reason that occurs is because if you look at the quarterly here, where's your magnitude on the quarterly to come and take out that, maybe that, and then possibly all this stuff if you don't get reversals against you, which you can see you did. But there's your quarterly magnitude right here. And you're going to see we hit that quarterly magnitude, hit the next one, stopped all those people out, come racing back through. So just to unclutter the chart, this is how you use those larger time frames. So let me just draw the one that it took out last. And you see like so. So the monthly, so the way we took this trade, you're going to see the short was off the weekly with this huge consolidation, mother bars and stuff. We get double inside week, and that means we're really interested in it because there's the tightest part of the consolidation so far. It's going to pick a direction. There it goes. Boom. Take out all of our targets in 1 week. And now we go to the daily. You're going to see this. What do we have here? We have inside day. So you could have taken it short right here to take out that weekly trigger. And then after you take that weekly trigger, you're going to look to the monthly. Once it can take out that, we're going to look to take out all this stuff. And you see it didn't do it that month, but it did do it eventually. And that's because if you look to the quarterly, that quarterly 2-2 reversal, we're looking to take out this. So you can enter right here on the short daily with your risk up here. And once that works for you, your target's going to be way, way down here. And you can see that's a $10 move. And what's your risk? It's going to be something like this, 50 cents. So if we were to do the risk reward or whatever, there's your 10 divided by 0.5. So you have a 20x risk reward. That's something that no one does with stocks, let alone options. These options win 1,000% within this week. Once we hit that magnitude down here, those were over 1,000%. And now you roll that, because if you're up 10 times your money, you can then roll that out, because we know this larger time frame has more magnitude. We can stick our money still in there for that, but we can take out what, 1/10 of our previous investment and let that ride. That's all house money. So now if you take out what you created with the option position up here, which you're going to see you have inside day add if you wanted to, but if you took out what you entered up here with, let's say you took up half, okay, you're up 500% already, and now you have the other half of that position that is all house money that you can just roll into further contracts that are further out to look for that magnitude down here. So you could have entered up here, had a free position all the way down here, and turned what, like, I think what the contracts were like 20 something bucks. So $20 to 10x down here. So we'll just say $2,000 to 20 grand down here at this magnitude. And then your 20 grand, you take out half, and you're left with 5 grand from 2 grand. And now you have 5K that isn't yours, that you're just shorting all the way down to this. And that's going to be $6 a contract. So let's just say you spent something crazy like what, $200 of 5K. So 5, 1, 2, 3 divided by 200. Now you have 25 contracts, and they just moved $7. So 25 times 7. So you made a 17K a contract. So you could turn freaking 2K into like over 100 grand if you just manage this correctly. And that's why those larger time frames are so important when you're trading, because if you can take such small risk up here, and when it works, it's going to work like this, which it does. If you look at any of our trades that work beautifully, they go instantly and they go hard and fast. So once those work, you can take just a little bit, and you're going to be you're going to be quadrupling your account super easily. And hopefully that kind of stresses the importance of this. And I know that this isn't going to be the best video explaining it, but this is going to be the start of me going through as many charts like this as I can to explain this. And it's going to be the start of a series, so you're going to need to look for that on my channel. I believe it's just going to be a gauging magnitude playlist. And it's going to be something where I go through like this on any setups we like and see. I'll go through it, and then we'll go through it again after the magnitudes or whatever have been hit or the triggers didn't work out. And hopefully that will help you guys visualize exactly what we're seeing here. So I will see you guys in the next gauging magnitude video. Feel free to check out any of the other stuff on my channel, and if you need a better explanation of the strat, I referenced the video that I had made previously. I will link that in the top of the description. So thanks for watching, and I'll see you around.